And we are live. Hi everyone, my name is Jess, and welcome to my channel, This Money Owl. I talk about everything related to money and finance, and I share my thoughts, my opinions, my rants, and stories, and my financial journey, really. So, I'm always trying to learn everything about money and finance and so here to share my thoughts and views with you guys, and hopefully as my channel grows would love to do Q&A sessions with you guys. So today's topic is national savings and investments. Why? Because it's the biggest news right now. What national savings and investments have done is that they've recently made huge cuts to interest rates, and that has affected millions of savers. I read this article which said 25 million savers will be affected by these interest rate cuts. And why, you might be wondering, why national savings and investments? Why are people turning to them? So, just a couple of days back, I was thinking of opening an account with National Savings and Investments because, number one, they are 100% backed by the Treasury, which means they are really very secure, whereas other banks will protect your savings only up to £85,000. So that's huge, especially if you're rich and you have money to save in. You don't want to save a little bit of £84,000 in one bank, or you want to be 100% sure about where you're saving your money. So yeah, the second reason why national savings and investment is attractive currently in this situation is because due to COVID, many people are now actually looking desperately for a place where they can keep their money. For me, I was like recently, I never really felt the need for national savings and investment except for premium bonds, which I did like the idea of being one in 24,000 people to have a chance at winning money. Um, but but yeah, I was just thinking of opening it 2 days back when NS&I announced that they'll be making savings cuts. Um, so yeah, now it's the situation is really bad because every other bank is following the Bank of England's base rate, which is currently 0.1%. So every bank has reduced their savings rates, and it's awful because now you hardly get any interests out of your savings. So banks are supposed to pay us money because we are trusting them with our money and saving money in their banks. That's why they pay us interest rates. The Bank of England's current interest rate is 0.1%, and most of the banks have now taken the liberty to just give really abysmal, horrible savings rates. Like some banks are giving like 0.01%, and some of the national savings and investments banks, I think was it the income bonds? The income bonds have dropped from 1.15% to 0.01%. So essentially, if you invest £10,000 if you save £10,000 in your savings, you will only get £1 interest. You will earn £1 on £10,000. How does that even make sense? Similarly, I mean, this was when all the banks had put like dropped their interest rates madly. National Savings and Investments was the only bank that still had a decent savings rates going. But yesterday, after they made their announcement, I don't know where people will save their money. Where is it really worth saving? Are they trying to disincentivize savings? Is that what the government wants, that we spend our money? We know the recession is here, so I guess the government does want us to keep spending our money. Uh, but Is it fair to savers? I don't think so. Uh, so currently, what are the best interest rates in the market? I mean, Marcus had a good, had one of the topmost savings rates. Now it's already gone down quite a bit. So some of you who don't know, Marcus is one of the offshoots and products of uh, uh, that were really offering a very high savings rate. Now they are just offering 1.04 or 1.05% savings. Um, and then Skipton Building Society, that's an interesting one. Skipton Building Society had a decent savings rate. I think it was 1.24%. In the current scenario, anything that's above 1% savings rate, that's very, very good. I mean, a couple of years back, even last year, you had 5% savings rate, and people thought that was good, and 1% was like, okay, not so good. But now things have changed. Now anything that's 1% and above, people are scrambling to open a savings account with those banks and building societies. So the funny thing about the Skipton Building Society was that um, the as soon as they announced the savings rate, uh, it, which is pretty high in the current circumstances due to COVID, the they closed the account within 3 days. They stopped people from opening accounts after 3 days, saying uh, that there was an unprecedented demand because everyone wanted to open an account with Skipton Building Society. So it's not just Skipton Building Society. You also have other options apart from Marcus. You have Coventry Building Society, so they are offering a decent rate of, I think, 0.96% in their easy access ISA. And there are a couple of other building societies. Nationwide had a start to save account, and they also have those prizes, quarterly prizes, quarterly, monthly, quarterly draws that they have, prize draws. So I think that could be interesting to some people. Principality Building Society is another one. So yeah, some building societies are offering some incentives now, mm, and yeah, I think different people have really different situations. Some people, some people. I mean, I just missed the boat with National Savings and Investment. Now I don't think it's worth opening. But yeah, if someone had recently opened an account with the bank, they can still wait until November, because that's when the effects will actually be taking place, the rate cuts. And if if you have a mortgage and you're trying to save money there, do you want to actually pay off your deposit, or you want to overpay on your mortgage? Uh, so everyone will just have different kinds of situations, even for those who are trying to save money to put into their emergency funds. Is that enough? I mean, at what point will savings rates turn to negative? Because there is still some talk that Bank of England might go into negative interest rates. I seriously hope that does not happen, because I don't think people will like that very much. Um, I mean, disincentivizing savers is one thing by reducing interest rates, but giving negative interest rates would just be terrible, really. I won't be happy about it. Um, so yeah, I think next steps for us as savers, what do we do? Where do we go from here? There are no places to shop around. Earlier, people would say, "Oh, if you've run out of this fixed term interest rate at so and so bank, you can just go to another bank. You can shop around for better interest rates." Now there's no place to shop around. Um, yeah, I remember when my 5% interest rate with First Direct got ran out. Then I went to another bank, and yeah, which was offering a competitive interest rate. But that's the thing. We we don't, all the banks are reducing their interest rates at the moment, and it's just going to get worse and worse. I mean, this was National Savings and Investment was like the one last hope of a good or decent interest rate in the due to in the current circumstances with the recession and COVID. But now we don't even have that. And premium bonds was one of the most attractive things for many people. I was thinking of opening a premium bond, of having a premium bond and maybe an income bond as well with National Savings and Investments. Now that's not going to happen. Uh, so yeah, premium bonds. I think I would say if you have premium bonds with National Savings and Investment, you should still keep it because you are still able to get that amount tax free. You will still be considered for the prize draw, although the number of people who will be in the prize draw pool will be much higher now. Previously, the ratio used to be for for one prize draw for 24,000 people. Now it's going to be one prize for 34 or 35,000 people. So that's a huge, you're competing with many more people now. Um, so yeah, that's how the Bank of England interest rate is going to affect all of us, and how even national savings and investment has been affected. Um, where do we see where should you put your savings? I would suggest if you have a premium bond, keep it there, keep your money there because it's still tax free. And if you yeah, I think I'm currently keeping all my savings where they are. I opened I could see this coming. That Bank of England would reduce their it would keep reducing their interest rates. But yeah, we don't we have run out of options. There's no place to save. I would suggest, if you can, put your money in investments. Uh, Currently, still, I would say the Vanguard 80/20 Life Strategy Investment Fund is still one of the best. Um, but yeah, even investments. I mean, there are still losses in investments now, but there's a chance that you'll regain those savings in the long term. So yeah, that's these are my thoughts on on what happens now, where next with National Savings and Investments. Uh, Please leave your comments and thoughts below and let me know. Contact me if you have any other questions and queries, or you want me to talk about any topics. We'd be happy to talk to you about that. Until then, see you, bye, and stay safe.